Hey there everyone, this is Joe from Bullion Now with your weekly precious metals technical analysis video where we take a look at the big four: gold, silver, platinum and palladium. Head over to bullionnow.com.au and bookmark the website. Online store is coming soon. There's our phone number Australia-wide. There's our email for anyone international, and if you just prefer email, and of course visit us in the store. You do want to subscribe to the channel. Hit the big red subscribe button right there. Join the family. 229 subscribers as of right now. 2 videos you should check out: how to buy gold at spot price, our unallocated program, and then our frequently asked questions from this video, and we did a response, so answering questions from that video: how you can buy gold, silver, platinum at spot price through our unallocated program. We already have had a few customers, so you really want to check it out. And of course, hit the follow button on Instagram as well, because we have a bit of a following now. We're selling a lot of stuff internationally, and some of the rarer stuff, the hand poured stuff that comes through, usually gets sold on Instagram to our international buyers. So if you're international, if you're not in Australia, you might want to hit the follow button. So let's check out what's happened in the last week, and it's been an interesting week. We've had slight, it's been an uptick for some of the metals and a down tick for some of the other metals. So let's take a quick look. We'll go on to the daily. This is gold, of course, and last week we'll check out where we were. So 1, 2, 3, 4, 5, 6, 7. Yeah, we were coming up. We'd already topped out, I think, at about 1340 roughly, and we were just down below this trend line right here. I have been talking about my bias to the downside, and it was a 51%. Now I'm going to change that, and I'm going to go just right on the fence at the moment, a neutral position as to where the precious metals are going from here. So we're not out of the woods just yet. I do think we need to see some key levels pushed through to the upside before we can say, yes, we're in a brand new bull market and it's all roses from here. But let's check out where we've gone to. So we did come up and break through nearly to the $1,350 US dollar mark, of course, US dollars, and we're using the tradingview.com website, all the way back down to, as you can see here, this line right here is the 18 average of highs. This is the 18 average of lows, and we did come back down to the 18 average of highs, and since back up trying to test this interim high right here of about 1350. We've got to see what happens from here. Here's what needs to happen. This is on the daily, as I said. We do definitely need to see it push up through here. Now that's just an obvious thing, right? Let's go to not the monthly, let's go to the weekly, and as you can see here, that trading range which we've been talking about, and we've been in this pattern between of approximately 1370 roughly, and all the way down here at about 1,000 something, but more so this kind of range here between about 1150 and 1370. Definitely need to see it pop up above this line right here at about 1370 and come up significantly and stay up there as well. So we do need to see a break through 1370, and we'd probably hit this area here at about 1430 before having a test back down. So definitely need to see a break above here, right here, before we can call this, potentially in a new bull market. So we're not out of the woods just yet, but I'm not going to say to you that I'm definitely thinking we're heading back down at this stage. Definitely in a neutral pattern right now. That is gold. I've definitely given you my previous targets for if we come to the downside. If this is the first time you're watching one of these videos, then those points are 1250, 1230 roughly, and again this trend line right here depends on when it hits. That's to the downside, and as I said, to the upside you're looking at 1370 is the mark we need to get through, and then the next one after that is approximately $1,430 US. That is gold. Silver is a little bit different. I think we're let me just pop down to silver. Again, this is in US dollar terms, and on the weekly it's actually a bit of a down week. I'll pop into the daily, and let's count back 7 candles. 1, 2, 3, 4, 5, 6, 7. Okay, round about here. It's where we were last week, about the sort of $15 mark, $14.80, $15 mark. And we have seen a rise all the way up to $15. And I was suggesting that it might be lower prices from there because I had that 51% bias to the downside. But we saw a rise up past 15 to about $15.15 US, but a quick move right back down. So could this right here, could this be like gold where it came up, came back down, and it's starting to rise again? Could this be the dead cat bounce, as they call it, where it has a bit of a quick ascending move back down? It looks like it's going to go back up, but then it's a fake out and it heads back down. Could that be the case? Yep, certainly could, but again, I'm just going to call it neutral at this stage because there's a couple of areas we need to see it break through. The next significant level breaking through, I would want to see it, well, obviously this one right here, you'd want to see it breaking the $16.20 mark roughly, and you would want to see it come up and test this trend line right here, and that's going through on the weekly. If you can see, that's going through this low and this higher low right here, and really what you would want to see is a break above this trend line and really to test this Fibonacci level right here for about $20. So if we can break up from here, hit $20, maybe we possibly come back and this becomes the bottom end. This now becomes support rather than resistance, and heading up through 21. That's going to be the big number. So in order for me to say, yep, we're not in neutral territory anymore and we're on our way back up, for me personally, and of course this is not financial advice, we would need to hit and break above the 21 US dollar mark. So we've got a little bit of ways to go before we can call this, a definite bull market again in silver. But right now, I'll call it neutral. I'm not going to say it's definitely heading down from here. We'll just see what happens. So that is silver. And let's take a quick look at XPT. That's Palladium. And tracking pretty much how I suggested it might be tracking as of last week. As you can see here, still within that triangle pattern, this symmetrical triangle pattern right here, just at the bottom end of the range. As I mentioned last week, we did come up to this level, which I'd put in a few weeks ago of about 830 US dollars, back down nearly to the bottom end right here. And it looks like if I punch in maybe onto the 4 hour, what's happening in the last 4 hours? Looks like, we might be making a play for this area again. Definitely needs to break through here, through the 830 mark. I'm going to call this neutral as well. Definitely not saying it's going to head back down from here. Of course, you've got this bottom end right here would be a level of support. So really at the moment in the short term, you're actually playing trading through the range of this trend channel, this trend line right here, I should say, and this other mark here of about 830. So could it, sort of bounce up and down a little bit before we break through if we are, heading towards a new bull market? What level would I need to see if we are going into a new bull market, or to say that we are? I've got a bit of a ways to go. I would probably still be calling this neutral. Even if we broke out of here and came up to the sort of 950, even the $1,000 mark, I'd still call that neutral. We'd really want to punch through, let's see, we'd want to punch through the $1,000 mark definitely before I could say, on the way to a bull market. That's where we are in platinum. And lastly, Palladium. Interesting rise in Palladium, actually. Let's have a look on the daily. As you can see here, I've been calling for, and I will go back to neutral at this stage, but I had been calling for lower prices because we do need to, at some point, now it's not a hard and fast rule, but in general, which, there are always exceptions to, after posting a new all-time high, this is where we did it about $1,620, you tend to come back and visit a previous all-time high, and as I've said a number of times before, that's in between about 1100 to 1150 USD. You can see this peak right here and this slightly higher peak right there. tend to want to come back and visit an previous all-time high before we continue upwards. But what we have seen is a very clear breakout of this downtrend line. That's very clear right now. We've broken through this Fibonacci level of about 1400. It's calculated from the new all-time high of 1620 and this interim low of 1270. As you can see, the different Fibonacci levels, and that's at the 38.2 level right there. Broken through that. If we're heading up from here, you're looking at resistance at approximately about $1,440, and the next Fibonacci level is about $1,485. But I'm not going to say we are heading up, and I'm not going to say we're definitely heading down. Definitely in a neutral territory. If we're heading back down, though, the next significant level is this Fibonacci level at approximately, where are we? Approximately 1350, and then I would suggest right here's this downtrend line may become the next level of support whenever it may hit, if we're going back down. And as I said below there, the previous all-time high of somewhere between $1,150 to $1,100. So those are the four in neutral territory, all of them in neutral territory at this present time, in my opinion. Again, not financial advice, and it's just my own personal opinion. And lastly, let's take a look at the gold to silver ratio. It seems to be slowly climbing towards the 1:100 mark, which is the previous all-time high in recorded history, I believe. And if anyone has better or different information, you can please let me know. We're just sort of creeping up. There we go, 86, 87, 88, 89. We're now through the 90 mark. That's the gold to silver ratio, which is the difference in price between the gold price and the silver price. The wider the gap, usually that means silver. Well, it does mean that silver is the better play, and the narrower the gap, gold is looking better as your option. So I would suggest that silver is most definitely the best play in all of the precious metals right now. Even if you love gold, and you don't even care about silver, you think it's the worst metal in the world, with a gold to silver ratio of 1:90, you want to be buying silver, because then when it drops, as it probably will, and I can't give you obviously 100% guarantees, but look at where it has been in the past, and this is only going back to 1998. Have a look at the real historical charts and you'll see it's been even lower, but it's so high right now. Look at this on the monthly time frame, the gold to silver ratio. If it comes right back up to 1:100 right here, which is the previous all-time high from quite a while ago, it's got so much room to move down that it certainly could. So that's it, gang. I'm going to leave it at that. So make sure you head over to youtube.com/Bullion Now. Hit the big red subscribe button right here. Why? Well, because of our weekly precious metals technical analysis videos. Check out the unallocated videos where you can buy precious metals at actual spot price. And of course, our weekly auctions, our specials, our discounts, and our epic unboxings as well. You know what to do. And of course, hit the big follow button right there. That's it, gang. Stay safe, and we'll speak to you soon.